Hello everyone and welcome to our monthly engagement for US non-farm payrolls. Today is Friday the 5th of July and we're expecting, of course, the data for the month of June. It was exactly 15 years ago, in 2004, July 5th, when Jeff Bezos, founded Amazon in Washington. If you're interested in this fact, actually. It took him over a year to have the company listed in the 500 stocks index, the S&P 500. It opened at $18 per share, and today it's actually around the 2,000 mark, right? So if you invested back then $1,000, right, you would have today over 100K. It's just an interesting fact that the NFP is today, and I thought I should mention it. Here on page 2, you can find my Twitter and also my LinkedIn information. Feel free to connect with me or follow me as well, if you may, to have a look at my daily videos and also insights to my technical analysis and fundamentals. Now, of course, before we start, I want to read the risk disclaimer. As always, foreign exchange trading and investment in derivatives can be highly speculative and may result in losses as well as profits. Foreign exchange and derivatives trading is not suitable for many members of the public and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained herein constitutes a solicitation for the purpose of the purchase or sale of any commodity, security, or investment, nor should it serve as the basis for an investment decision. Orbex Limited does not guarantee the accuracy or completeness of any information or analysis supplied. Now, as always, the agenda is the same. We will start with the Nfp Preview, okay, what analysts expect. We'll see what economic indicators are important for this release, and also we'll get an idea of how we can project what their data are going to be like. Are they going to be positive or negative, and why? We'll do some analysis on that. Then we're going to choose what are the best pairs to trade based on fundamentals as well as technicals. Some simple tips to protecting your capital, and then we'll go on straight to the chart. So I'll try to be quick on the first part, and then so we can actually concentrate and focus on the charts in about 10 to 15 minutes. I will try to be short. So starting with the Nfp preview, okay, the analyst expectations. Now, if you see, the last NFP wasn't so good, okay? We had 75K, okay? We were expecting 176. This is like a 100K miss. Today, we are expecting an increase from 75K back to last month's forecast at 176. Okay, 170 pretty much. It's like 6K short. Now, there's been some cyclical slowdown in the auto sector, and that hints that it's a modest slowing in employment change. However, the manufacturing sector remains expansionary, okay? So we could miss the expectations, but that doesn't necessarily mean that the reports, the data are going to be bad, because to be honest, if it is above, let's say 150, I still consider this as positive. Now, the June's release was worse than May's. We had 263K versus 75, but also pay attention that June's NFP was revised down from 263K to 224K. Okay. Now, on the other side, I want to go quickly over the three main important data, because obviously it's not just the headline number, it's not just the non-farm payrolls, right? We need to look at unemployment and, of course, the average hourly earnings, because they are what they cause inflation, and very, very important, especially at around this period where the Fed has turned dovish and is looking for further signals on that sort of data to either confirm with the rate cut or pretty much stay on pat. So analysts expect the unemployment rate to fall to at 3.7, which means will be more unemployment people. In February, analysts exceeded expectations. They were expecting it to fall to 3.8, but actually it improved at 3.6. Now, in terms of the hourly earnings, they are critical for this report, as I said just a few minutes back, as a bad figure will add further policy pressures on the Fed. And it may even validate not just 1 or 2 rate cuts, but a third rate cut. So previous figures missed expectations by 20 basis points, from 0.4 to 0.2 on a month-to-month basis. Now, the expectations are still upbeat. They are above the 3%, and that is what still hints that there might be inflation in the future, which is very important for Fed's decision. But know that year on year, it fell from 3.2 to 3.1. Now, expectations at 3.4 look a little bit high, to be honest, over-optimistic, but you never know what to expect. We're going to have more signals around that when we go through the economic indicators a few slides down the line. Now, the latest data in terms of inflation, right, showed that year-on-year inflation fell from 1.19 to 1.8. And that missed expectations for 10 basis points. And of course, that raised expectations for a rate cut. Now, there is at least 8 FOMC members that expect a rate cut this year. Markets obviously are more pessimistic. They are actually between 50 and 75 basis points cut. So that's like between 2 and 3 rate cuts. And this particular NFP is going to give us more insights as to whether this, let's call it, debate between Fed and markets is going to balance out at some point. Now, the Nfp Preview also consists of some indicators, okay? So we can project where prices are going to, not prices, where the figures are going to come out near just by looking at some indicators, lagging indicators and also leading indicators. Lagging indicators is the ISM manufacturing, challenger job cuts and jobless claims, the ADP, consumer confidence, including the Michigan and also the CCI. And of course, the leading indicators are the treasury yields and the equities, as well as the crude oil prices. We're not going to go into much detail on this, so we can promptly shift to the charts. But instead, I have put a table together that actually gives us a clear image as to whether all those indicators give us positive or negative signals for the NFP. ISM non-manufacturing, okay, came out worse than expected. And the employment component also worse than expected. Now, the manufacturing, as well as the employment component, came out better than expected. Challenger jobs cuts came better than expected. Jobless claims worse than expected. The ADP worse than expected. And then, of course, the consumer sentiment, one was better than expected from Michigan, the other one worse than expected. These are the lagging indicators, okay? And to be honest, we've got 1, 2, 3, 4, 5, and 1, 2, 3, 4 of them pretty much in balance, but leaning towards to the negative side because we have an extra indicator that is negative. Now, in terms of treasury yields, equities, and the crude oil, all of them, according to this morning's trading activity, are looking negative. If I'm not mistaken, the dollar actually has gone up over the past few hours. So I would suspect that we can move the treasury yields component onto the left. It would be a pro. But again, we have 1, 2, 3, 4, 5, 6, 7 versus 5. So we are leaning towards the negative side, which doesn't necessarily mean that the Fed is going to miss expectations, but it means that there is going to be a slowdown compared to the average okay? And now the average is around 170, 180, maybe even 200, I'm not too sure. But any figure, I believe, below the 150 might be considered as a Fed negative, let's say. Now, how we can choose the best pair to trade? There is two different ways, okay? The first one is by looking at interest rate differentials. Considering that most of the banks have now turned dovish, and there was a change, a cut by the RBA last from 1.5 to 1.25, yet again, that doesn't tell us much in terms of the Australian dollar, okay? The truth is that because we've got the lowest negative rates in Switzerland, and still the United States are on top with 2.5 interest rate, the biggest differential would be the US dollar against the Swiss franc. That means that if the NFP comes out positive for the dollar, then the best choice from capital flows would be to buy the dollar Swiss franc. If we come to the if the results are actually negative for the US dollar, then the best chance would be to sell the strongest currency against the dollar. So the next one up after the United States is the Bank of Canada, okay, with 1.75. So the QE as well. So in case that it comes actually worse than expected, we can sell the dollar CAD or even the dollar or even buy New Zealand against the dollar. Now, the other way, of course, to do that on an intraday basis, okay, because we are talking about interest rates, we're talking about 1.5 months decisions in the banks. Now, intraday basis, we're looking at the strength of each currency, okay? The dollar seems to be quite strong, all right? Now, the other currencies that they are strong for the day are the euro, the pound, and the CAD, okay? And that is actually the scenario, given that this indicator is updating often, okay? So the Canadian dollar actually is indeed here. So I wouldn't be, leaning towards further from what I've said before in terms of interest rate differentials. If the NFP comes good, dollar against Swiss franc looks like a very good opportunity. On the other side, on the downside, dollar CAD sell if the NFP comes out worse than expected. But don't forget, okay, that might be a good idea, right? You're listening now, but don't forget we also expect the employment data from Canada, right? So if the Canadian data come out good, then that would be the top trade. But if they don't, you have to switch to a different pair, okay? And I would actually switch into Kiwi against the dollar. Now, a little bit on risk management, and we're going to go straight to the charts. There is different ways to protect your capital, okay? Avoid trading in general because it's very volatile, very dangerous. If you do go into the markets, make sure you have a stop loss and take profit, and make sure you don't overweigh your sizes, okay, your lots. If you don't know what to do and you're close to, you want to avoid the volatility and all these risks, one way is to close out all the positions you have ahead of the NFP. The other one is, of course, to hedge your positions. But hedging is not as easy as it may sound, okay? So you need to make sure you know what you're doing. And now, if you're eager to trade despite the warnings, another option is just to let the markets calm down and trade after 30 minutes or 1 hour. Take advantage of taking profit from the institutions, okay? Now, of course, the other thing I always recommend is, as a tip, is to always analyze the data post the release, okay? Everything is important. It's just not the headline that matters. It's also the average earnings. It's also the unemployment rate, okay? And of course, then pay attention to the divergence between the actual and the consensus figures, okay? If we are looking at a gap between a miss of 20 or 30K, that's not that big, okay? If we see the expectations being missed for over 30K to around 50K, this is a good sign that we're going to see large moves, okay? Now, I want to stop with the slides and jump to the charts. I'm going to start with euro dollar. For some reason, that seems to be a little bit slow. Okay, so what I want to do, let me just delete that stuff over here because they are a bit distracting. What I want to do, go on the 1 hour chart, okay, and talk quickly about expectations. Now, on euro dollar, we're expecting prices to move a little bit lower, where another wave to the downside is going to be completing the correction, okay? Is this the last downside move or not? We don't know yet. The NFP is going to give us more signs. Despite what we want to do is draw a resistance. Actually, let me make that a little bit more visible for you. And the other thing we can do is draw a support. I will draw my support down here, okay? Now, depending on the results, these levels can be used to facilitate a trade, whether it's a sell or a buy, or they can be also used a little bit higher, of course. For example, that is a good level to act as a stop, okay? Now, because we are far from that level, maybe we want to go here for an entry, okay, around 1254 and around 10 pips lower. Take profit 1. Let's go for take profit 2 at 1235. And then, of course, if you want to maximize that, you can go lower to different levels, including the 25. And then on the upside, we can go to 113 actually. I wouldn't go higher than that because it's a strong psychological level. Now you may ask, you talked about dollar, Swiss franc and Kiwi, but why euro dollar? Because euro dollar is the one that has the most flows coming into the markets, okay? It's always a good option to trade the euro dollar and the dollar yen, okay? Because interest rate differentials pretty much have not an immediate effect, right? So NFP is something that creates momentum, and its temporary effect is the one that moves the markets most in a very short period of time. Interest rate differentials have an effect in the medium to longer term, okay? Now I want to go on to the dollar yen, which is number 2. Dollar yen, we are expecting to move a little bit high. As you see, the technicals contradict a little bit this NFP. So many say that this NFP is going to come out poor, but for the US economy, the charts, the technicals are telling us that the dollar is going to go up. Anyway, despite that, we still can draw our levels so that we can take advantage of opportunities like this. So our bottom level will be over here. That can be used as a take profit 1 or 2. Entry could be the 108.05. Then on the upside, we are very close to entering that an area that prices are probably most likely going to consolidate, but let's just call that level a good level for an entry, and a good level for a take profit could be indeed the getting up that middle line this trend line could be a good take profit level. If you don't like using trend lines, of course, for that, then we might as well just draw a resistance over here. And that would be, if we entered around 02, let's say, that would be a very good level. 30 pips higher up. Okay. Now going to the next one. I will leave pound out today. Gold is pretty much like trading the euro dollar, dollar Swiss franc. Again, the technicals are telling us that prices are going to go up. Okay, so we've been sitting here on a correction. We've ended wave 5 down here, and we are on wave C. Where is this going to end? We don't know, but let me just put that 161 level here as well, because it can be very helpful. Now, if we look at entries, most likely I would be going for this one here, 0.9885 or so. On the downside, we could go with 0.9867. Take profit around there. On the upside, I would probably go around that level, okay, which is the 99. If you want to be a bit more risky, you can go up to 99.20 or so, okay. And on the downside, same is valid, around 98.35 or so. Okay, don't forget that you can actually partially take profits at these different levels. Okay, that would be the best idea, to be honest, and then move the stop loss to your entry point. That's how you can avoid losing pretty much. Okay. Now the next pair I want to look at. Let's look at the Kiwi. Okay, we don't have any wave analysis here, but I can tell you from what I see here that this looks like a nice correction with wave A, B, and wave C ending somewhere further down. Again, the technicals are showing that the dollar is going to be stronger than the rest. But this is just one event. It could just create a false break, and prices would maybe perhaps carry on to with the technical sentiment rather than anything else, because the truth is that the US economy is starting feeling the pain from trade war effects, okay, and the economies are slowing down, and most likely we will have the US bank, Fed, cutting rates in July. So from here, I've got these levels drawn, but I'm not sure what they are and when from. So let's draw some new ones. Okay, seems like we're going down. So my entry on the top side could be around that level, 66.60 or so, 66.65. On the downside, we have to go with that level, which is the 66. Actually, let's go a bit lower, 66.50 or so. Okay. Take profit on the downside, 66.40. Another level, 66.27. On the upside, we go to 66.77, and then 66.95 is around the 67 cent psychological barrier, to be honest. So let's just turn this into a different layout. Let's have 4 charts over here to look at. One will be, of course, the Kiwi. Let's give that a few seconds to load. So this is the Kiwi. Okay, we are on the 1 hour chart, don't forget. Let's change that. Let's change the first one to euro dollar. Second one is dollar yen. Third one is dollar Swiss. And fourth one is the Kiwi. Okay, and these are our levels. This one looks a little bit far from, okay, let's just do that. That is a bit more visible now, more clear to see. Euro is moving up already. Yeah, expectations for a rate cut, I guess. And the other two seem to be looking okay, apart the Kiwi. We can also move a little bit higher as well, so we'll have a full clear image. Okay, and all we'll have to do now is wait for the results. While we wait, let me just go to the calendar. I guess all of you have the calendar on and keep refreshing, right? Yeah, I do the same thing, but let me just keep that on the other screen so that we can also keep an eye on the charts. Don't also forget that there's a lot of activity, right? And I wouldn't be surprised if there is some lag from the liquidity providers' side or anywhere, including, of course, the connection itself, because we're live streaming. So just as a reminder, bad NFP and good Canadian data is a big sell for dollar CAD. Okay, combined, of course. On its own, avoid the dollar CAD. If we get a bad NFP and a bad Canadian, then I would go for Kiwi with US. Okay, that would be a buy. And then, of course, if the NFP comes out good, regardless of what happens with Canada, a good buy would be the dollar against the Swiss franc. So we've got these three pairs, four pairs, to be honest, the euro dollar as well, which is always the option, and the dollar yen is always the option. So, okay, dollar Swiss, New Zealandian, euro, and okay, so we don't have the Canadian dollar here, but let's just switch it with the dollar CAD. Dollar CAD. Entry for the upside. Actually, we just want the sell here, right? So since we're already there, that would be a nice entry point. The exit, well, it really depends. It could even be down here, right? The exit, let's just have a look what's happening here. Okay, yes, I forgot that. The dollar CAD has been hitting fresh lows. So the exit really can be a numerical value, let's say 50 pips below the entry, or the 130 actually would be amazing, no? Okay, results seem to be, markets seem to be moving already. It looks like we have good results. or fat fingers before the results come out, really. Okay, so I can see the results. I'm able to see the results. We've had a, let me just go quickly there. So we are non-farm payrolls for the month of June. For some reason, this is getting stuck, but the headline number is very, very, very good at 225K, which is 50K above the forecast. And that should be bullish for the dollar, okay? The, let me just refresh that on the side so we can have a look at the charts. So as expected, the technicals actually supported these moves, right? The dollar is moving higher, despite the fact that there was a miss on the average hourly earnings. So there is a big hit for inflation. Most likely is going to make the decision for the Fed harder at the end of July, because you really need inflation to start peaking, right, in the US at least. The good thing is that we are still above the 3%, right? And that, as we said before, is expansionary. Okay, we are above the 3. That means the inflation is most likely going to peak in the next few months. Maybe not at the expected rate. As I said, you know, the forecast of 3.4 was like over-optimistic. But the numbers keep coming out. The headline numbers keep coming out very, very strong. Now, the unemployment rate fell to 3.7, but that was expected, okay? A mixed bag of data, if you ask me, okay? And I have really doubts as to whether these moves are going to continue. We're probably going to see a whip show effect very, very shortly. Or I might just be wrong, but just keep that in mind, okay? As you see, the levels we talked about, for example, on euro dollar, entering 112.53, exiting 112.44, it's worked out very well. Dollar CAD, we said, would be only a good opportunity if we wanted to sell, so let's just leave that out, and we can bring instead dollar yen. Dollar yen doesn't seem to be moving much. That is because I believe the average earnings are coming, came out worse than expected, which means inflation isn't looking good, and that reiterates fears of a rate cut, which means people, institutions send flows to safe havens, and that's why the yen is keeping the prices contained against the dollar. If we move quickly on dollar Swiss franc, as we said, entry 0.9883, exit at 0.99, exactly as expected. And last but not least, we can go on the Kiwi as well. We talked about Kiwi being the strongest of all. That was also a buy opportunity, but since we analyzed it on the sell side as well, entry didn't seem like we had a good entry here, would be around that level, 66.57. Exit still far from happening, and that is because, as you can say, who were more bullish on the QE rather than bearish. So it will be hard to get to that level because QE is kind of strong in the medium and longer term against the dollar. Okay? So as you see, dollar Swiss franc is the one that pans out exactly as we expected if the headline numbers came out strong. I'm not really convinced about this move, to be honest. I keep repeating. I believe we're going to see prices reversing very shortly. Now, on the Canadian side, just for the record, the employment change came negative. So, contraction in the Canadian markets at minus 2.2K. They were expecting 10,000 people to be added, didn't happen. The unemployment rate weakened at 5.5%, okay, and also away from their historical low now, okay, given this figure. Now, I keep saying the dollar Swiss franc going up, and because we're very close at the very strong psychological level, the 99 cents, right? The 99 Swiss francs. There you go. Okay, New Zealandian with Aussie, with dollar is reaching the level. The dollar Swiss franc goes for the furthest target. Euro dollar is going exactly to where technically we expected prices to go down to. Okay, it's leaning towards that level. And then dollar yen, still a little bit more fuel to get to 108.48 or 50. While we look at the charts, feel free, please, to ask any questions, okay? The NFP is done now, so if you have any questions, you can feel free to ask. That's going to give us quite a few minutes to get through and analyze the answers. I see there's quite a few people in, but probably everybody is really looking at the charts, opening and closing trades. So as we said earlier, if there is any of you that really isn't trading as we speak, and that is, of course, the reason for that is, trying to avoid all the volatility and the risk, or you might have capital that you're not really looking to invest in such risky environment, then the other thing we said that you could do instead is wait for the markets to come down, okay? And when we're talking about coming down, that's not going to be in the next 20 minutes. That's going to be about 1 hour and 20 minutes. So give markets around an hour and a half after the event, okay, to start showing you whether this NFP-led pattern is going to continue or not. Now, question came through. You expect the dollar to strengthen in the coming month. There is a lot of things we can look at in order to project whether a currency is going to appreciate or depreciate. The truth is that the latest ISM data, if not mistaken, came out worse than expected, okay? And the ISM is very important for the US economy. because you know, manufacturing and also services are what actually provided most of the jobs in the US. Now, contrary to that, the NFP data show that there is a lot of new people coming, you know, getting into the employment markets. So a question lies here: what are going to be the effects, you know, of the next 2-3 weeks, I think, where the ISM data come out again, okay? But until then, of course, there will be other, an array of data that is going to give us some signs. Truth is, if we look at the data itself, right, as we said before in the slides with the table, what they were weighing the pros and the cons, we didn't, we were more bearish rather than bullish on this NFP, right? And that seems to be actually erased now as an option. It seems like these projections weren't really supporting what's happening in the markets as we speak, because the employment data are good. Now, in terms of the dollar, we will have to go and have a look at the US index, okay, from a technical perspective. Because from a fundamentals perspective, I think we have to wait for incoming data to give us more clues, okay? Now, the Swiss, no, it's not, it's the dollar index. If we look at how it has been moving, I was actually expecting prices to move up, right, to complete this correction. It seems like now, since we are breaking above the 97.10, it seems like that there is chances prices either, you know, retrace back, that is like a false break, and start moving back lower, or we're going to see prices moving back up to around that level, which is the 97.50, okay? If that wave 4, okay, actually no, we're expecting, okay, here's the thing, we're expecting an ABC down here, okay, and we're still wave 1, 2, 3, 4, we're expecting 5, it didn't happen, and that means that we have to look at it as a 1, 2, 3, 4, 5, okay, and then ABC that can come up to here, okay? That will be the last target, okay, 95.50. So if prices get a rejection over that level, then we're looking for sells up here, okay? And considering now there is this sort of optimism, if you want to call it, because of the headline numbers, we could see prices moving a little bit higher, okay? That could be the case. Because this is also the C wave, okay, it could as well just turn out as an impulse with an AB, and then we'll go 1, 2, 3, 4, and 5. Okay, and this is where we'll start looking for further clues. Truth is, the US economy is still the strongest amongst the other economies, because all the other economies seems to be in much trouble. The US is the last one on this line, okay, which means we might see some upside momentum for the first month, and then going into the second half, or the second and third of the quarter, prices could start moving to the downside. Now, looking at this at the 1 hour chart, if we have a look at the daily, here's what we can see. Let me go actually on the 3 hours. Here's what we can see. We can see that prices over here broke outside this channel after a lot of time, okay, after a long time. Now that, as you see, could simply be a retest of that level with a false break onto within the triangle, you know, within the pattern. And then prices after here can start really moving to the downside, okay? But in any case, the invalidation to the upside is 97.70. If prices break that level, we're looking at dollar moving higher above the 98 level, okay? On the downside, I mean, if we break back below the 96.60, 96.45 level, then we're probably looking at prices moving lower. And why that level? Because we don't want that to turn out as a inverse head and shoulders. Because if that happened down here, then prices would move back up. And from here, we can expect then the decline to start, but still, if we see something like this, then this is the next level to look at. So number one, 97.70, number two, 96.45. I hope that helps. Any more questions for any of the attendees here today? Why don't we just go on the dollar Swiss franc? That is the one we were really bullish about, and that's the one that is actually reached our last target for a profit. So from the entry point, 0.9884 up to the exit, 0.9917. We're talking about 30 pips at least, okay? So not bad for an NFP. Obviously, that the pip size is what matters most, right? Not how many pips we get. So obviously, with proper risk management and money management, you know, going like 1%, 2%, maximum 3%, I would say, maximum, right? On this event, then you should be able to have pocketed some good percentage of your account. Another question about the S&P. What is expected to be the top, and where could it be the retracement? My friend is short and wants to get out. Okay. Shaba, I can't really recommend where to exactly get out, or you know, I'm sorry to hear that your friend is short. Sounds like he's in a loss. Here's the thing with the S&P, right? It's very hard to say where the top is going to be, but I'm going to give you a few clues. Clue number one, we are at all-time highs, which means overextended, right? Overbought. And we've reached the 3,000 psychological level. Do you know when prices were back at 2,000? Let's have a look. That was years ago. So 2000 reached the 2000 first back in September 2014. Okay, so that's 5 years before, nearly. So 5 years before we reached psychological level. And what happened to prices? Yeah, from 3,000, 2,000, they retraced back. How much? 20 pips. 200 points, call them whatever you want. Okay, the main point is history tells us something. We can either use it or not. Why don't we just go back to the 1,000 as well? You know, when was the first time that the S&P hit the 1,000 mark. That was back in 2003, okay? Did we have a retracement? Yes, but very, very, very minimum compared to the previous one we just saw, and only for 40 basis points, 40 points. And then we had this crazy run to, 1500s or so. So from a historical point of view and from a technical point of view, we are actually looking at a correction, even a small one, as we speak, okay? Now, back on the 3 hours. This is the 3,000 level. The thing is that I was expecting that to be wave 1, wave 2, and we go up for wave 3, right? Over the 3,000. Now, there is a lot of things to consider when we take it, when we take this projection from fundamental point of view, and that is because there is fears of a recession. Recessions don't happen actually one day after the other. If there is going to be a recession, it will take at least 2 years, but Fed lowering down the rates is an indication that that is danger, okay? What would a rate cut mean for the S&P? That would mean the prices are going to go up, right, for the S&P. And that is the reason now it's going down, because the dollar is going up. If the Fed cuts rates, it means that businesses will have more access to loans, cheaper loans, okay? So they'll be able to get more with less, pretty much. So stocks are going to go high, okay? So that's until the FOMC decides on the rates. Now, before that, I was looking at this as an ABC, but as you see, it got overextended. I was expecting this to start moving lower here, but maybe this is just a false break, right? A false break above the previous all-time high. This is just all a false break, and prices will start moving lower from here. Now, what do we see on the 1 hour, on the 3 hour chart? Do we see some divergence? Yes, we do see some divergence. We do see some bearish divergence. Do we see the same sort of signal being provided on the MACD? Yes, we do. Okay, but the momentum still remains a little bit high. Okay? So if you ask me, I would wait to see prices breaking below the 25.56 and then below 29, okay, with even a retracement being possible around the 28.31 or even the 28.65 level, okay? That is the thing. We need to keep an eye on the market and decide what to do with the incoming signals and the incoming data. In the longer term, as I said, if the Fed cuts, we're going up. That's the case, right? Now, if there is uncertainty until then most likely we're going to move in a range. That range could widen. Okay, we could move down here to wave 4. I wouldn't be surprised, even if we are going to see after this move to the upside a correction. We're going to see it with at least, some sort of move to impulse to the downside, a correction, and then impulse to the downside. And this is where we can expect further clues, okay? I hope this helps again. So any other questions? We do have a few more minutes, so I will just actually take one more question and then call it a day. Dollar Swiss franc seems to have found a top at the level we expected. Actually, most of the pairs have found the resistance or support at the levels we talked about. Okay, so dollar down to 112.35, which if you ask me is around the area that I was expecting prices to go to, mostly to 111.85. That would be like the last level I can expect euro dollar to move to. Another question, Australia 200 is going exponential. What is the top there and correction? Let's have a look at the Australian index. Very quickly. Okay, let's just go to indexes from here. AU. Nope. That's the thing that we don't know how most of the brokers have them named out here. So it is Australia 200. Should be. SPX, no. It's a bit weird. Australia 200. ASX, probably. There we go. Okay, I'll tell you what, let's just leave that out. Let's just quickly open MT for 2 minutes on the SPX. Yeah, seemed to have tried, but doesn't seem to be there. Okay, let me just get my MT4 over here. Not sure. Sure, okay. That is a little bit weird, not being able to trace that index through trading view. It should be ASX, but it doesn't come up. Let's just go to all for a change. There we go. Okay, I think the 3 hour, let's just go back a little bit on the 4 hour quickly though. Okay, that looks like a correction to me with potential and around that level. Let's just have a look how that looks over 61.8, a tad higher than 61.8. Okay, so we've got 3 waves. That is definitely not. So we could see prices. So we've got that one here. Yeah, 38 and 23. What we need to do is also draw from the last low, okay, and see where prices are going to correct to. Okay, so we have a very good level at 64.47. Okay, this is it. Now the next one would be 62.45. Do I see any signals that tell me the prices might indeed go down? Yes, consecutively. I do, okay? What we want to see though now, if we go down on the 1 hour quickly, okay? This is like a triangle pattern. Normally, when you get that, this is a throwback, and then prices move again lower. Okay, what we want to see, of course, is number one, the break below that level, which we are actually currently seeing. Okay, once that happens, prices most likely come to here. It's going to move back up higher, and then if it doesn't get to that level, okay, that means that we'll have wave A, wave B, and then wave C, with again expecting that level to break. Okay, we would have a price coming here and then back lower, okay, to that level. Now it could be a case where we have an expanded flat here, so that would be something like with a lower low A, B, and C. Okay, thing is, we really need to look at those signals down here. Okay, and they both show as bearish signs. Okay, I've got it. Thank you, Shaba. So that's for the Australian index as well. I hope this helps. Now, I'm not going to take any more questions, and I want to thank all of you for watching this monthly NFP webinar. Thank you very much for the questions. In case I haven't had time to respond much on the latest one, feel free to contact me on LinkedIn or Twitter, and I'll get back to you as soon as I can. Don't forget, as always, to visit our blog. Is where we'll cover the latest ideas. We have articles coming out actually for NFP since Thursday, okay? And we'll have, of course, a lot of technicals as well to help you improve your trading skills in a responsible manner. Have a nice weekend, everybody, and I'll see you again, hopefully next month.